Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with the one and only Bob Iacino, who's not here because it's the weekend, but I am here. I am here doing market prep, and yes, the stock market is closed tomorrow, but the futures market is open, started tonight at 5 p.m. Central Time. So if anybody trades the futures or other things like interest rates, the FX futures, and there's been Bitcoin stuff going on all weekend, energy, and early trading ends early tomorrow, but then reopens again tomorrow night. Okay, so you have to keep that in mind with your trading. So again, it closes uh, the equities close at 12 p.m. Central Time tomorrow in the futures, and then they reopen at 5. So it's really good. You can get these schedules if you want them off the CME group. You can just do CME group and search for their holiday schedules. And every time there's holidays coming up, you can download it. There's a big one and a small one, like a short one. This is a small one. I'd recommend downloading the small one unless you're into a ton of different markets, okay? But you can see if you're a lumber trader, I'm sorry, you're SOL tomorrow. You're SOL. If you're a livestock trader, you're SOL. So just keep that in mind. Let's see who is here on a Sunday afternoon. Hello, 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 Options 22. Glad to have you. I am always impressed with the people who show up. And if you can't show up live, I understand it. The people who watch it on the replay, because that means you're dedicated to the markets. And, it's really good to get your prep in way ahead of time. Okay, so even, this gives you some time, even if you just trade the stocks, you get your futures view because the futures, the macro is going to drive the micro. So you got to get that macro in. All right. And then you can spend tomorrow going through, if you trade multiple stops, going through finding could be some good setups, but you already then can watch the futures tomorrow, sort of get a feel for what's going on, and then be fully prepped if you just trade the stocks on Tuesday. Good afternoon. Again, Jake, thank you. I am well. Good afternoon, Amit. Abraham, if by Tuesday Russia will still be out of Ukraine, market may shake off concerns. Yeah, and there could be another concern. I'm going to tell you something. When the market's trading like this, okay, when the market's trading like this, there's going to be concern after concern after concern. Why? Because let's take a look at the big picture. Here's the big picture market, and this is about to trigger another major sell signal. I follow a few different long-term systems, and more of them are triggering major sell signals. And you don't really want systems that trade or trigger too early because the market tends to go up. So these are systems that are conservative, that when they do trigger is pretty much a big event. And we're getting to those big events. Now, why I'm talking about that in terms of the news and what's going on is because when a market's rolling over, and look at this market. The last for this was the COVID crisis, but then we had a couple dips, but nothing major. And if you compare, this was pretty much just a relentless sell down. But this sell down, bounce. Oh, it's bouncing. Now what's happening? And everything, there's going to be things that flash across headlines for, oh, it's buy mode again. Oh, it's sell mode again. But the overall macro, we're getting into that bigger sell pattern. And so, and people are going to blame it. There's going to be a crisis. There's going to be this. There's going to be that. There's going to be whatever it is. And it's going to say, the market's selling off because of this. And it's going to be the day's headlines. And yes, the Russia-Ukraine thing, if it, if nothing really happens in the next few days, could it die down? Yeah. And then, what'll probably happen? Another thing will take its place. Because that's the thing with financial media is, that's why it's mostly garbage too. Because I'll wake up in the morning, I'll turn on some of the stuff and I'll say, the market's down due to this. It's like the market, then how did we already know that there was all right, we're in the middle of a double top pattern, and so it's still more likely to go down? Because we have the probabilities in our favor. Now, just because it's going down, they'll find a reason it's going down. And if it's not Russia, Ukraine, and it's not COVID, and it's not Canada, and it's not Italy, and it's not whatever. It will be something else. Just learn that in this game. Just like when it's going up, they come up with the most ridiculous reasons the market's up when they really don't. The market's up because it's natural tendency is to go up, and especially when you have your Fed keeping rates at zero and doing quantitative easing, things really tend to go up. But they find in there, oh, it's up today on this, it's up today on this. Turn it off for the most part. I'll look at some news feeds just to see when things scroll across because you get momentum bars. But this is where you say, oh, that's bearish, but then it rallies. Or that's bullish, but then it sells off. Watch for the momentum bars. Watch for the patterns kicking in. Watch for your triggering of these major patterns. So, let's see who else is here. Let's see again. So, sorry, that was a long-winded answer to Abraham. Yeah, it can shake off the concerns, and another concern could be in its place. Again, we have to trade the charts. We have to trade the probabilities. Okay, Michael, happy Sunday, sad day with no more football and baseball canceling games. Yeah, you got the baseball lockout going on, and football's all done. Football's all done, but you know what? We still have the excitement of the markets. You're the best and worth investing the time while I drive my Tesla. Well, I'm glad you still tune in, even though I'm bearish on Tesla. And I hope you are driving it. The car is not driving itself, and I hope you're paying attention to what I'm saying and not watching the screen and watching the road. I do not want people to have accidents because I say something crazy in a live stream. Can you go into detail on the sell signal you see on the SPY? It's based. Boy, I have some proprietary stuff which is not mine to share. The one that I will be putting out, I'm in the middle of recording it now. This is about to issue. It has not issued yet. But let's just go over this. And a lot of people trade this as a head and shoulders top, and it needs a close below neckline. Now, why we won't trade it as a head and shoulders top, let me just show you something, is because it's a declining neckline. And those are less probable for the targets, okay? But if we want an idea, and I can't use a declining neckline for this, but if you want an idea of where this could go from a head and shoulders top, this is just a sell signal for a rollover that I will use the shorter term projections. But if you want an idea for downside projections with this, if we just go with a rough flat neckline, we cannot go with this and come up with these targets. Let me take off the magnet. Then I'm just going to give you an idea. And this has not officially triggered. The head and shoulders is not officially triggered. This other system is not officially triggered. But you're looking downwards of potentially 3,700. Okay? Rough, just a rough cut with that. So keep that in mind. And some of the systems on sell systems, they don't have targets. I have to use other things. It just means, okay, the probability is now severely enhance more downside price action. That's why I follow multiple things. Now, can every one of those multiple things, because they're all probabilities, and is anything 100%? Nothing is 100% unless it's like a system that only has 2 or 3 data points. But I don't find that very useful because 2 or 3 data points, anything can be 100%. But let's say your next one's wrong and you had 3 data points before. Well, you're still 75% correct because you only have 4 data points now. So this stuff I'm following is generally very, very strong. That's why we'll put it out there. And when it does get sell signals, it's something to pay attention to. And just because multiple signals or multiple systems have sell signals in the same area, same time frames, and I'm talking in the matter of weeks. They're not all going to trigger on the same day or same week. But, when you have a major topping pattern like we potentially do now, you're going to see a bunch of different things triggered. Now, does that increase the likelihood? No, because each thing is an independent system with independent events. And theoretically, we could have 10 systems let's say we have 10 systems all trigger massive sell signals. And there's 90% probability for downside on all of them and 10% probability on the upside. Could they all technically be wrong? Yes. Are they all likely to be wrong? No, but let's say the market goes to new highs after they all trigger. There was a 10% chance. So, but I want to be with the probabilities on. I'm a probability trader, and I want to be with the probabilities on the larger scale. I want to be on the probabilities on my side because long term, that's what pays off. So again, long-winded answer to Amit's question, but there's roughly, you can say, we start getting some downside momentum. What will I start watching before then? I will start watching. Here's my downside targets just from harmonics. My first major downside, if we break below this 4,200 in the S&P, 4138 is minor. 4064 is major, and you got these little tails here on a weekly basis where this was major dip buying, and you see this is why I love the harmonics too. Sorry, I'm already just going nuts today because let me switch over here real quick. Look at this. We do to the harmonics. I gotta actually remove those harmonics because they are now invalidated. But look at this first level, harmonic level, and that was the harmonics taken from this high on January 3rd on a weekly basis to this low of the 24th. 12 and 25%. Look at this 12%. And look, if you're just drawing key support lines, and we want to watch for candle bodies, don't let people fake you out with going off highs and lows unless there's a ton of highs and lows in that area. Learn to go off of candle bodies. But look at that. And why am I drawing it here? Close above that, retest, close above it. Big retest, close above it. Retest, close on it. Move away from it, close right on it, little dip below it, and rapid move away. So that's what I call a significant level. And look where it is. So you got a harmonic and a significant level here. So you sell off, I'd be watching this key area below this 4212. That's the next key area. 4064. Now look, this is where I will pay attention to. We have a couple of bottoming tails there, candlestick wicks. And how am I going to pay attention to that? Because now I also have a harmonic in that vicinity, because also you're into a clear path move. Now, I'm doing some teaching today, so I hope you enjoy it. We come back down here. We have my rough head and shoulders. Now, this is an estimate. Okay, because remember we had a downward sloping neckline, which has not been triggered yet. So this is a rough estimate, this 39.77. But I'd be watching in this zone for another key area of support. Why? Not only is it near a target, a rough estimate target, we had a clear path move, and we have prior resistance becoming support. And you can see down here, look at down here. Look at the next, and this again, remember, rough estimate, but if I'm trying to fine tune stuff, there's some minor significance right there. I might be able to tune it more. I mean, we could go to this level. Look at this level, is really nice. Move away, then we get the rapid move and retest, and then move through there. So that would be my next target area. Then this 3,700, and I would not ignore that. Why would I not ignore that? Because look at this. Let me try to get my cursor in the right place. Look at this, resistance, support area, target area. So we have targets to the downside. So if the move accelerates to the downside, we've come up with all our targets. We've used rough targets from head and shoulders that I wouldn't trade, but my longer term systems are getting into sell modes. We do have declining price action, and now we've come up with target zones. All right, does that mean you won't have rallies? We'll have massive, and here's what fakes people out, especially when you're tipping into these downward markets. You get rip your face off rallies where everybody thinks it's over, like this. 1, 2, 3. Oh, look at this. The worst is over. Boom. You see that? The worst is over. Boom. Could we even have, we have a potential, we still have a potential double bottom in here. It would take a close above this 44.8450 level. to trigger. And the second target, first and second are still barely within, so it's okay, but that could be a rotation up and retest these levels. Is it possible? Yeah. Okay. So we have to trade with the probabilities, but the probabilities are shifting drastically to favor downside moves. All right, let's see what else we have. Let's see. Like Bob says, read both sides of fundamentals and pick the one that best fits the price action. That's how he does the TV spots. Again, yeah. How do we do this? We have the analysis, and a lot of times he'll contact me and say, "Hey, give me your or give me your technicals on whatever crude, or give me your technicals on gold or silver or something," and I'll give him with the key levels, and he'll go, "All right," and he'll go, "Did you ever? Yeah, we just triggered a reversal pattern." He goes, "Okay," and I'm looking at the fundamentals of gold and everything with inflation. Well, I'm going to go on TV and the fundamentals, we're in bullish mode because of this, this, and this. But he did it from the technical perspective. And then he picked the fundamentals to match what the technical picture said. Because, you're going to go on like Bloomberg News and say, my business partner has this high probability double bottom system with a key reversal based off a divergence that says we should hit 1925 before getting into another sell signal. You think that's going to be interesting TV? No, everybody's going to go, oh boy. That's why I'm not on TV. Because that's the kind of stuff I would say. They'd say, well, what's the fun? I'd say it's inflation. We're in inflation. Buy gold. And here's the patterns and here's the technicals. But they don't want that on TV. Okay, you're on autopilot. I hope both hands are on the wheel and you're not using one of those cheat devices. The only reason the market goes down is because people are selling. That is true. When you have more sellers than buyers, the market will go down. And when you have more buyers than sellers, the market will go up. And why do you tend to get rip your face off rallies in bear markets or in downward markets? Because not only do you have buyers stepping in who are trying to catch a bottom, you also have people who are short that now have to cover, and that's where you get the rip your face off rallies. And once they start, then people think, oh, the bottom's in, it's self-feeding until it peters out. And, then you have the sellers coming back in and the shorts coming back in and saying, okay, I think this is a little overdone and I want to unwind more stuff. So let's start selling again. I didn't hold my puts over this long weekend. I hope for a rally in the morning to reload. That's okay. Fine. I hope you get the position you need to get reestablishing a position. And there's always ways to get in positions again. On this time frame, how do you draw a harmonic from the all-time high to the short-term low? So what I was doing, let me take off these harmonics. I'll show you. So what I'm going to do is I'm going to use my harmonic, which is this trend-based fib extension. We're going to go here with the anchor on. Make sure you have the magnet on. Magnet, all-time high to this key low, and then I'm going to click once and twice. Now I have my double targets on there, so I have to switch to my harmonics. And just for anybody new here, again, everything's shared. There's nothing secret here. And this is stuff I know if somebody else is teaching it recently that it was taken from me and this channel because I learned this from myself and researched it. We used a 0.125 or 12.5%. We used a 0.25 or 25%. Those are the ones that test out best for the short-term moves. And that's how you do them. Do divergences increase double tops and double bottoms probabilities when they are present at the same time? No. The double probabilities remain the same. However, you have another system that's kicked in with different probabilities. Okay, so now you have two things showing there's a buy or a sell signal, and they're both tradable events. And again, they're independent events. So it does not increase the probability one way of each system. That's where it's not additive. Okay, you can't say I have a 70% probability and a 56% probability. So, I mean, that wouldn't make sense. You'd have 126% probability. No. Now, I've tried to do some testing with doubles, and some of them have divergences, but it's got to be on a lower right hand leg. And it sort of skewed. It came out with some weird results, so I stopped doing the analysis because you have to do so. Only a subset of the doubles would be candidates for divergences, so it just wasn't worth it. You're better to just trade doubles and trade divergences. And, if you're trading both systems at the same time, you might have in a double position. Okay. So if we break 42.12, then a clear path move. Actually, we're right at this closing area now. It's got to start getting into, if we break the next major clear path 12, no, because you get into this area, we just have this little area right here. You start getting a close below this 41.50 area, you're into a clear path move. So write that down. Close below 41.50 into clear path move. Okay. I might take a look at that in a bit. Bought a big box of popsicles, ate them all, increased my popsicle stick net worth. Well, I congratulate you for increasing your popsicle stick net worth. Maybe you could get some Elmer's glue and you can make a popsicle stick house. Because real estate, is a good long-term investment. So you could build a popsicle stick house and then you could be diversified into real estate. You are welcome, Ken. I am glad they are helpful. I'm just trying to share as much information as I can with people to get them thinking about things. And the more I can share and maybe one thing sticks, then it helps you long term. You are welcome, Amit. Rich, we can take a look at that too. Let me get through some of this market overview. We can take a look at Euro Pound. You're welcome, Jake. What's up, Didier? What's up? Sup? All right, so let's back to the S&P. Still waiting for those long-term signals to officially trigger. Where my key area still with support, we have a harmonic and the target of the double still down here at this 42.90 area, 42.91, 42.88. So on selling tomorrow, overnight, tomorrow, or even Tuesday morning, that's going to be my first key target area. Then my next, with the significant level, 42.60, and the next harmonic, 42.54. That is my next target, then 42.12. Okay, so those are my downside targets on weakness. My upside, by the way, we did close. See here, this is why I leave some of these lines on. We closed below the 62.5% from this run-up. So now the probabilities also favor continued lower prices. That does not mean you can't have rallies, but it continues favoring a retest of this low area. Keep that in mind. On a rally, now let's look for some other significance in here. Let's bump down this level. We're just using, look at right here. You can use these charts. It's so helpful. Why is this significant? Because look, this was a close. All right, key close right here. Let me move this out of the way. Key close. Huge sell-off and rally back. All right, and getting back above that level. Retesting, this being resistance, then close above that. Tried to dip below it here. Closed still above it, rallied back up rotation zone, closed below it. Now this level, and it's a little zone about 43.93 to about 43.89. That would be my first level of resistance on a rally. Where do you think my next level of resistance would be? Well, let's take a look at this. Now, why am I gravitating here? We have a key close here. All right, and a high. So this would be minor, but it also reinforces Friday's high. So that would be a minor level. So on the next level up, I'd be targeting 44.11. So let's say we start getting strong momentum bars up. We start getting through 43.89. I'm targeting 44.11. to the top of the rotation zone, coming in with this low from the 16th. So I look at highs and lows, yes, but I need to have reinforcing price action there. So we have a lot of resistance up here between 44.11 to about 44.21. So on a stronger rally, that would be my first area. We get above there. There's going to be some people leaning against this 44.39 area, which was the trigger point for this double top. But my next major area, we have this key close. Couldn't close below, couldn't close below, couldn't close below. Finally closed below, but then it retested this area, almost closed back on it. Top of the rotation zone, 44.68. So those are my upside targets. And then you get above there without making new lows that blows out this double, then we might have a potential double trigger with then I have targets the upside. So now I have all my targets laid out to the downside and the upside. Where does it favor? We still favor downward price action. Why? The rotation zone is in bearish mode on the daily. The rotation zone on the weekly is in bearish mode. The rotation zone on the 4-hour is in bearish mode. So I am favoring bearish mode. And I gave you the targets. That's how I put together my trade. Does that mean we can't rally? No. But if it's going to take something like momentum bars or a little short-term double bottom, which we maybe have, maybe be horribly sloppy, but let's take a look. Looks nice on that 1 hour, but let's see. We have to check with this is against the rotation zone, so I'm using conservative targets. All right. Does not, won't trade that using the doubles. Why? With this big hitch, this is the move that started it. And look where the second target is. It's beyond the candle bodies. So it tests out at lower probabilities. Okay, so I will not use that as a double bottom. Does that mean, let me show you something though, on a 1 hour basis. So just ignore these other lines. Just go off this line that I'm talking about right now. Right near this peak, but look at this. Support, 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 break, sell off. Trying to get above it, can't. Declining rotation zone. So we start getting stronger. Where's an area that, all right, if we start rallying, I'm not going to be aggressive to the long side until it can show me. And this now I'm going down to the shorter term time frames. Not going to be aggressive until we get above 43.75 area. Why? Declining rotation zone on the 1 hour. This was prior support, verified as resistance. So could we come up here and then roll over again? You bet we could. So any rally, that's my key target. So if I was going to do something really aggressive on a short term, let's say we got some 5-minute momentum bars, that would be my first target. And I'd be moving up a stop and taking some off because if it rolls over again, I want to lock something in. All right. So, and this was, and look at this. This was a double. I had to get down. This is where you start going through all the time frames. And this was Friday afternoon. I remember this one very clearly. Double, trigger, first and second targets hit. Not the third target hit, but could we easily resume trading and hit this target even tonight? Yep. So I will on any bearish mode because the future's open in about an hour and a half. I still have downside targets. I'm just not going to leave them on the chart right now because I can redraw them. But we have a whole trading plan. That's exactly how I develop this kind of stuff. That's exactly what I do. And it doesn't matter if this is the S&P. I can do the same thing in the NASDAQ. I can do the same thing in a stock. That's how I come up with levels. And then I let the market instruct me with what to do. On a shorter term basis. On a longer term basis, I'm favoring lower prices. On a shorter term basis, we could bounce, we could roll over, but I have my targets either way. Is the market open tomorrow? The futures open tonight. The stocks are not open. Again, tomorrow, stocks not open. However, Is that for, yeah, after the close on Monday? Yeah, you see, you still have some companies reporting even though the stocks are not open. But the futures are open. And the futures are so tradable now. And I think more people should trade the futures, especially when it gets a little more challenging in stocks. Because you can even trade the micro futures, and it's not a lot of risk. They have micro futures for the S&P, micro futures for the Nasdaq, right there. Micro futures for crude. You can trade all day long with that and keep your risk really contained. And there's fantastic trading in them, and the levels work really well. Oil markets. Well, we'll take a look at oil. I didn't know what that was in reference to. When you just type in, and I'm not picking on you, Abraham, but when you type in something like oil markets question mark, unless I know exactly when that question popped up, I don't have a reference point. That 43.90 ES also happens to be a 58% retracement from the spike low to the run up high. Very good point, which I've pulled off some of those levels, but the spike low to the run up high, because I try to declutter my charts, but this, you know how we do this. Well, that's even below. For my spike low to the run up high, that would be 35.50. But look at this. Remember, we look at these lines. Look at this line. Remember here? We came up with this significant level right here around 3,700, 36.92. Look at that. Or this one right here, 38.19. That's a 37.5% harmonic. And the 50% for that whole run up would be 3,500 with this key resistance point. All right. Boy, I got sidetracked. I'm more optimistic than you. 3,400 on the S&P is eventually target of this correction, which corresponds to the first red candle from where this rally started. More optimistic than me. 3,400. Well, I'm glad you're more optimistic. I'm not really pessimistic. These downsides, I'm just expecting a much bigger correction. That's not really pessimism. That's just where the probabilities are, which is fantastic because I love sell-offs because you get to reload a whole portfolio at better long-term prices. I actually love sell-offs like that. So, what else do we have? Boy, I already wore myself out. Sorry for all the overlap stuff here. By the way, in the NASDAQ, we've already triggered the long-term sell signal, by the way. It's been the weakest, and that's already been triggered. So I am really favoring lower prices. Let me get down the time frame here, get off some of this stuff. We had our double top trigger, which that was really nice trading to the downside. I have to pull that one off. This one was done to the upside. No, there's not going to be a double there either, but look at these harmonics again. Remember, we had these harmonics from this low. Let me show you here. That's why these harmonics are so great to help you find levels and fine-tune your levels. So these harmonics gave me, you can see that little spike low hit it, and then that gave me this next cluster at 13,900, and both those were hit. So those are done for now. The next major target area I'm just watching for to the downside is 13,837. Then this 13,706 to 13,663. If we go through there, the next major level would be 13,418. The next minor level would be 13,511. I'm doing a reverse harmonic there. So that's my downside targets, but I'll be really focused tonight and tomorrow on 13,838 to the downside. To the upside, it's going to be somewhat similar to the S&P, but not exactly. So this was support, resistance. So my first target to the upside is 14,140. Then, why am I drawing on this one? Then, that's 14,140. Let me pull off these because we're so far down there. Then my next target area would be about, I would have to go to about 14,350 area with the declining daily rotation zone, so above Friday's high. And then the next major target I'm looking at, is about 14.6. So those are all my upside targets on the bigger time frame. But my first target, this 14,140, 1 hour rotation zone, that's going to be key. If you get through there, the next minor target, I'd use this. The first minor target would be 14,241. Then I'd be using 14,281. Why? This is an advanced clear path move in here. And this is the breakdown area. And then you have the major resistance area top. Let's see. Mike, do you feel the SPY is easier to trade than the QQQ? Yes. Yes. The QQQs and the NASDAQ, this holds true for the NASDAQ mini futures also. It's a little more whippy. And it's easier to blow through levels. The S&P-Y and the S&P-E mini is so deep. The levels are slightly better on it. Okay. Mike, what's PTP's track records in terms of percentages since inception for last year? How about, do you guys perform better in bull or bear markets? Several questions here. Let's see. For the last year, but I don't have the numbers for 2022. I was going to do them at quarter end for last year. I'd have to look those up, but I can look them up and you can re-ask me later. I think more people pursue. Well, for the stuff I do, it's long only. Not for what I do personally, but for the stuff I put out there is long only. So it naturally performs better in a bull market. For what I do personally, it's mixed, because when we're in a bear market, I'll just favor downside positions and spreads and options and put spreads and everything else. In a bull market, bull markets are way easier to trade. But you have to, especially for a long-term timing stuff. So I'll have to look up the percentages and I will give you that. And I just can't look them up in the middle of the live stream. Please give us examples of your sell and buy signals. Which I follow a ton of things, Kalani. And you think I show a number of them here. I don't show everything because it would be way too overwhelming. But just focus on doubles, divergences, and rotation zones. And you'll get at least 50% of the stuff I follow. Hey, Josh. Crypto is bleeding? Yeah. Amit, you're welcome. The Secretary Blinken is scheduled to meet with the Russians on late Wednesday and anticipate a ramp upwards until the talks conclude with nothing accomplished. I don't think anything accomplished, so we'll see if there's a ramp upward. Now we get to some of these key lower prices like these doubles complete, or even the second target on NASDAQ. I would start favoring a short-term bounce, but I'm going to let the market dictate that bounce to me. Dow, again, still favoring longer-term price action lower. Next target is 33,720 area. Take off some of this other crap. Way too much crap on the charts. Also, Dow just closed back below. This just avoided issuing a long-term major sell signal on Friday. Just avoided it by the skin of its teeth. So I am still watching for the potentiality of that occurring. But the Dow, again, 33,746 is very key. You have this significant level from over here that came into play back in September and October. We could not close below it multiple times. So that's the next key area I'm watching, with the final target for the double to the downside. To the upside, let's just verify. I always need to verify. See, again, no double bottom here. Does that mean that pivot point is not key? it is still very key, again, because you have support, support area, resistance confirmed. So that's key. You get above there, then I'm just targeting that 34,460 area. So that's really easy. But that just means, it doesn't mean, some people say, oh, see, the double worked. What it means is because it's this, I can't use those targets, so it's not a tradable double, but that area, a break above that area is very tradable still. I just can't use the targets. I really hope that makes sense. I'm trying to give more insight into that. And look at this target, this line I just drew. Now you looked at your multi-time frame, the 4-hour rotation zone. So even on a rally up, this now is reinforced that this is a very key area. You start getting above here, then it's the top of the rotation zone with this other line I already have, 34,460, 34,464. You get through there, 34,619. Why? That was this key breakdown point right here. 34,619, where's that sit? That's just above the daily rotation zone. So again, very strong reinforcement there. I hope you're seeing, just even if you take a couple concepts away and use them, that's why I've stacked these concepts together, but you can come up with your key levels to the upside and the downside very, very well. Again, Dow, daily rotation zone is bearish. Weekly rotation zone is bearish. 4-hour rotation zone is bearish. 1 hour, bearish, but we might get a little potential rally if it can get above it. But it has to show some strength. Russell. That double did not trigger. Let's see if this is a valid double. Now, Russell still has a valid double. It's the only one that did. Because the second target is, this is the move that started it. The second target is within the move that started it. So I would be targeting about 2038 to about 2036 as stop raising if this were to trigger. 2044 would be my major target on that. Then you get it back up here. It just happens to be with a significant level at 2050. So you have major resistance up there. This double that was triggered from way back when, at the end of January, is still in play. It needs to get back down into this area before it's off the table. So if we do get the rally, this is one of the areas. The Russell's holding up pretty well. We do have a potential double, and you also see that double hits the high from Friday. So we start rallying. The first two markets I'm going to look at, the S&P and the Russell. Those are my first two for upside plays. For downside plays, the weakest thing has been the NASDAQ, so that was my first target for the downside, and then it's the S&P. Last would be the Russell because it's been holding up the best so far. Crude, still crude. We had the topping thing, finally got the pullback, little rally. I mean, this is going to keep trading on the Russia thing. Possibly a bottom put in with the 25% retracement. Let me pull off some of this stuff too. We don't need that on there anymore since we hit all those key levels and we've got the bigger pullback. So now I have to reset everything. What do I need to confirm this? I need it back to above the 12.5%, which takes it above Thursday's high also. So we get back above about 91.50. That's a confirmed rotation back up. Until we get that, also a close then above Friday's high is a buy trigger. And that would be in front of the weekly rotation zone. So that has to be with a tight stop below Friday's low. If we don't trigger that and we sell off again, where am I targeting? I'm targeting, my next area is about 86.50 about 86.50. If we drop below that, then I'm coming back into about 84.25. Gold starting to watch for another topping pattern. Uh, Short-term topping pattern and a pullback right against the harmonic levels. If we do continue to rally, 1917 is my next major target. Silver, same thing. My next target is 24.21, and then above there, I'm targeting about 24.46 to 24.50. But I'm watching for more of the pullback in gold. Notes coming right up here. We have this double. Still watching. It's what was the high here on Friday? 126.25.5, 126.25.5. So this has not traded through, so it's technically not confirmed. But we start getting above that, and if we start rallying above 127, I'm watching 127.13, 127.23, 128.01. What's interesting with the notes is that's going to take me back to the weekly rotation zone area and get off this tremendously oversold condition. And then I will look to, there will be, again, more shortable opportunities in notes. Dollar index still caught in the middle. And since we talked earlier, what you had EUR, let's first look at EUR USD. I know it was EUR GPD that was, I mean, this is really, I'm just watching on the euro dollar. I'm watching this 112.78 or 112.80. By the way, a couple key things you should take away from if you're trading FX is start looking at the last digits, and 80s and 20s are key. So beyond that, 112.80 is key. 112.20s are key. I'm watching for that. If that breaks down, then I'm watching for a retest of this 111.40 area. To the upside, I'm not bullish again until we get above about 113.80. 113.80, then I'd watch for a retest of this 115 area. Now, in terms of Euro GBP, Euro Pound, let's see what we have here. So I know Rich typed that in. Euro Pound for long-term buying opportunity around 0.832 zone, 832, which is right where it is long-term. Yes, there's a fair amount of support down here. Really interesting. There is some major support just below that it bounced off. I'd be watching this key level, 0.8308. You know, if that breaks, that will not be good. However, you could get a short-term bounce in this area. That's the only thing. It would be a short-term bounce at least until it got above at least about 0.8525. What else do we have? Planter or Palantir. Again, I was thinking of doing more stocks tomorrow afternoon. Even though the market's closed, doing some more stock prep tomorrow afternoon. If anyone's interested, I'll probably put out a live stream then. Palantir. I mean, this would have to be again, you're bearish mode on the daily, bearish mode on the weekly, bearish mode on the 4 hour. So anything here would just be a super short-term bounce play. The only thing I don't like trading these because you're trading against all the key metrics, so it can roll over. But if you had to play this above about 11.15, you're into a clear path move with a target of about 11.48, 11.50. So that's 11.48, 11.50. Little pause right there. Yeah, 11.50 to 11.61 would be my first major target. And then above there, longer term, I'd be targeting $12. Now, what that's interesting is it just takes us back into this prior major support becoming resistance. And why do I generally not like trading those? Because I'd rather trade something that's not fighting overhead resistance. Why? Because it can roll over at any of these points. I know people love to do their little bottom calls, but look at this one. Let's say you bought anything in here. You have to be super nimble because it rolled over again. See, this is you're fighting the like if you bought in here, it rolled over again. A little buy here, rolled over again, rolled over again. And yeah, one of these, but why don't try to call the absolute bottoms is because look, this could rally, backfill, and then set up. All right, now maybe we get a double, maybe we get a backfill, and then some momentum to the upside, work off some of this weekly rotation zone. You know, we tapped it once and then start putting in a longer term bottoming pattern. That's what I'm more interested in rather than trying to catch these little bounces. I'd rather play strong things to the upside than trying to call a bottom in Palantir. Now, if especially if NASDAQ rallies, will this probably rally? Yeah. And I gave you the targets, the upside, but you have to be really nimble and really quick and manage your stops and not let anything turn into a losing position. Is MSTR qualify? On what you had this qualify as a double bottom. That did. But it's already hit the first and second target and didn't quite do a full gap fill just in front of the final target and the full gap fill and then rolling over. And that's going to trade so much with crypto. So that's already hit there. On the short-term basis, you had this little mini double, but that's on a 15-minute basis, and you're fighting a long-term declining thing, so that would just be a super aggressive trade, hitting stop reduction. So if that again trades back down to 389, 390, trade is over. But you can use those levels to the upside if you need them, 402 and 404. But other than that, see, again, you're trying to longer term, just back to weekly rotation zone. And then even if it rallies a bit more, 486 is some pretty major resistance. We could even bump this down to about 450. And you get above 450, your only targets are then to me to right around 500. So you might have a little room to run, but I'm not bullish on this long term. Anyway, let's take a quick look at crypto. I was looking at it earlier. Remember, crypto, we had the rally. Then we started watching for the pullback, especially when we had a potential double top. Double top triggered, paused just in front of the first target. Now already at the second target. And now, by the way, I went with the aggressive targets because of the volatility in Bitcoin right now. So the next target down for me is about 37,300. We break below 37,300. I'm targeting about 35,000. We get below 35,000. I'm back to most recent lows. Ethereum also double. This is using conservative targets. And let me take off that line too. We already hit the first. We're getting close to that second target. Second target is coming in 25.53, then 24.61. And on any rally, you have, I'll go back to Bitcoin too. You have 28.40 is now your major resistance level. And on Bitcoin, on any rally, it's not even back to that peak. I'd be looking at about 40,700 is the first rally. So any resistance, I'm still watching for another rollover. That was the crypto. I went over Palantir. Crypto's red. Is it a sign? Well, it's a sign. It's just following through on that double top pattern. But if Bitcoin gets below 35,000, if you're bullish on crypto, start getting really nervous. I did Palantir. How's your friend Kathy Woods? Ah, Kathy. Her deep value portfolio. Oh, Kathy. This is in critical junk. I mean, she really needs that Nasdaq rally to. But at longer term, look, she's already closed below that 62.5% level from this whole run up. Okay, and what happened when she closed below there? Longer term, watching for this thing's. I'm watching this to easily go back to 48. 48 to 52 is my next major target area. What would make me at all short-term bullish? You have this little potential double bottom. I don't think it would trigger, but a move above 78.25 would trigger it. And it's essentially just a return to this other major support level becoming resistance in the other end of the rotation zone. So I'm just watching for this to longer term just keep bleeding out. Sorry, Kathy. What time I'm thinking for stop prep? Could you set up the live stream so I can add a reminder? I'm thinking 3. Let's just do 3:30 tomorrow. I'll also put it in Discord. So 3:30 tomorrow we can do more stocks. When you buy will matter more than what you buy in the market we have now. Yes. I not necessarily, because I would rather the stocks that have held up the best. On a market that's rallying, if we get one of those strong rip your face off rallies, I'd rather have the stuff that held up the best. Those would be the names I'd look to get in first. The stuff that's held up the best versus stuff that's got trashed. Meaning, I would not be rushing in. We already covered a Palantir. That would not be my first pick. What would be a better pick than, you start getting a look at this. I mean, you're not far off with Apple. I'd rather jump if I wanted something to the upside. I'd rather jump in Apple. We start getting a strong thing in the Nasdaq. I'd be in Apple first before Palantir. Because look how this is barely off its highs. And, versus this. This, I'm trying to catch a falling knife with limited upside. This has held up pretty well. Now, do I think Apple is going to lower prices? I think it's easily going to fill this gap. I think longer term, we're going to see Apple at its 200-day. But we get a rip your face off rally. If you forced me to buy a stock, I'd be jumping to Apple to check the price action there first. Something like Apple. You start getting a great little rally. I'd still look at Micron. Yeah, and I know it's semiconductor, but you look at where this is in terms of it's still in great positions up here at near its all-time highs versus something like an ARC or a Palantir or what else? Or why would my first thing, I wouldn't be jumping in something like SoFi. Okay, so those were the examples. And Microsoft, I'm still expecting lower prices. Now, this is something I would not jump in. I just wanted to see where it was. I did not look at it on Friday. Why? Because it's broken its 200, and now, even on a rally, this is major resistance. Okay? So, this would not be my first choice. All right? NVIDIA I might still look at, even though it's pulled back a lot. Just because it's right against this 200. So I might look to see if that were to hold on a short-term basis, but it breaks this 200, all bets are off. Hey, Mike, EWZ is a Brazil ETF for a discussion the other day. It looks strong. Let's take a look. EWZ. Yeah, see, all right. It's back to its 200. Oh, this could be a great long-term play. Now, this is something, even though it's still below its 200, I'd be watching for this on any pullbacks. It's a little overextended. Oh, this could be great on some pullbacks, though. You know, you get some pullbacks in this, or even around the 32.50, 32.25, 32.50 area. That could be ripe for a nice little bump up to it. It's already softening the area of the 200. Remember, the 200 is an area. It's not a brick wall. I've considered this softening it once. You get a pullback, make another run, soften it twice. So this could be very interesting on a pullback. EWZ. What's your long-term target on the NAS? $11,700 to 12,000 area. My closer term target on an accelerated decline would be about 13,000 right in here. And again, we will get those massive little rallies, but again, we're cascading down. But longer term, I'm at least looking down in this area. Longer term. AMD versus MU. We already looked at MU. AMD. I'd be in Micron first. Why would I be in Micron first? Because of where its positioning is. Look, this has come off pretty substantially. It's below its weekly rotation zone, trying to hold on to the 50-week right there. It's against this daily rotation zone, and it's sitting at the 200 again. All right, if that breaks, I'm watching easily for a return to about 99.50. Versus Micron, above its daily rotation zone, above its weekly rotation zone, clearly above its, and then you're at, look at where the high area. Yes, you have some resistance, but if Micron can get through this 98 to 98.50 area, watch out, because this could be forming a long-term top. Does that mean it can't pull back? No, I don't have a trade in it right now, but if stuff's rallying, and even if semis are rallying, I'm going to be in Micron before I am AMD. Just on relative strength. What sort of companies do you look for long-term holds not to trade? Well, that's again, what point of the market we're in. And I'm now favoring, well, I still have to record the sector overview, but that's why, do you watch my sector overview? Why do I do a sector overview? Because that helps me narrow down. Now, like XLE, very strong, major bull mode, even on pullbacks. So I favor energy stocks. Things I don't favor. This is on the verge of triggering a sell signal in XL real estate. So real estate, unless there's something incredibly outperforming, not interested. XLF, still in buy mode. Again, it has to hold this longer term trend line that was gap below, but you know, we even pull back there. I can look for some financial stocks, especially outperforming. XLK, technology. We're getting into a sell signal, and we could be getting into a major head and shoulder sell signal. And yes, this is a declining neckline, and I was going to go over this in the sector overview. But look, this is not an area I'd be rushing into. Why? Because it might trigger multiple sell signals also in technology. So again, I need something really outperforming. But you get into something like, where is it? Healthcare is going to trigger a sell signal. Let's see, what else? Consumer staples, very bullish. All right? Very bullish. Does that mean you can't have pullbacks? No. Look at this. We had a little mini double top pulling back to hit all the targets and then resuming upwards. But this is that pullback gave re-entry. So things I'm watching, consumer staples. Also, why am I watching stuff like consumer staples? What's another thing I've been talking about? Uh, Value versus growth. On the way down, this is favoring value and getting rid of growth. Now look at this on a big perspective. Look at this run up. I'm going to go to a monthly chart. This is the run up of growth. And look how long it's been wiping out value. Okay? And then recently, look at this. This was obliterating value stocks versus growth stocks. Coming back down, slight shift into value, major ramp back up into growth. Look at this, longer term. I know you can spot this pattern. So guess now, if you think about it, let's say we get below this 187 area on at least a weekly close below there, you're triggering a massive, and we still could have a massive on this other system. I follow a massive sell signal. It's not happened yet, but we get a massive sell signal. You could retrace these levels back to where we were breaking out from end of November of 18. Guess what? We start triggering this. I'm all in on things that fall in the value category, and I'm continuing to not look at anything in growth unless there's major outperformance. Why? This whole period, I mean, this has been in buy mode since, really, it's been in buy mode since 07. It had, I think there was a little blip where it was a couple months sell period in here where it was out of everything. Other than that, it's been in buy mode since 07. But can that unwind? Can you see this go into value stocks for months? Yeah. So would I be rushing into growth stocks then? No. Does that mean you won't have rallies? Of course you'll have rallies in growth stocks. Just like this. When we saw that rally in the NASDAQ, you saw the money rushing into growth. Did it last? No. It rolled back over. That's where I want you to think about the macro pattern, and it's going to help your trading and investing. All right? Not only trading, because trading can be very short term, but I want to be in the stuff that's most likely to go up, not the stuff that's swimming against the current. So that's where, Didier, I'd be starting to really favor consumer staples and value stocks. And things that I would not be looking for long-term holds would be high PE ratio, momentum, very overvalued stocks, even though they've pulled back. Google, we had that gap from earnings, filling that gap. No, I'm not interested in Google right now. Do I think we will have rallies? Yeah. Am I interested in it? No. At least it's still holding up somewhat, but now you've got weekly in bear mode. Daily, which you popped above it with earnings, but then collapsed back below it, back in bear mode. And this is horrible. The fact that it had its major earnings, but then collapsed, filled the gap, and now it's continued lower and back below its 200. No, I'm not touching it. Why? Because yes, we could easily rally back to 27.38 and then roll over again. So this is what people are saying. Well, I could buy it at 2,600 and it could get back to 2,700. Okay, look, I'd rather be buying it. I'd rather if this, and it, again, we're favoring all sorts of further decline in price action. But I'd rather buy this thing right around 2000s again, potentially. I'd rather get in something longer term. Even before that, even at 2300, it could be buy signals. I'm not chasing this up here when the probabilities aren't there. So no, I would not be in Google right now. That's not to say we won't have bounces. You will have bounces, but then you're fighting, okay, like this little bounce. Well, now lower. Even this bounce, big bounce. But look, unless you bought in this little section, you're back underwater. Do you see where this is why the timing with this stuff is so hard, especially when you have the sectors against you? Like the technology sector is not doing well, and it's liquidating stuff in technology. Will there be buys? Yeah. Do I have a buy tomorrow? No. End use on fire after Warren Buffett's $1 billion investment. Yeah. It's still, I mean, I'd have to do a lot more uh diligence on this and watch something. It's still caught, I mean, doesn't have a lot of price history. So it's I mean, short term, you get back above this about 1025, there might be a very short term play, but this thing could easily see 670 again. So there's again, this gets into gambling to me. Or I have to be trading this off an incredibly short-term time frame. Why? There's no long-term trend. It's caught between two bounds. Yeah, look, you had a double bottom down here. That was the play. Here was the play. Okay, because you start getting back below this 846 level, you could easily see a return to that 660 level. Right here, I don't have a pattern. But I know key line in the sand for anything bullish would be around 850. You get back below 850, I'm watching for 660 again. Everything else would just be short-term momentum plays. Like this. This was short-term ignition bars, pausing bar. Okay? You know how I play these. Couldn't get back below the 62.5, so you got your pausing bar and then a strong rotation up. That's your momentum ignition to the upside. And then the reverse happens to the downside, then it just bled out. So long term, I'm not interested in anything in that yet. Hey, Mike, what point do you consider a new trend established? Thinking about the daily major indices, looks like new lower highs and lower lows. Well, I like to start seeing higher lows and higher highs, and I at least like to see a shift in the daily rotation zone to back to bullish mode. And again, remember, I'm not trying to call the absolute low in anything. I'm trying to wait till something is established. Also, you're going to have stuff like horizontal channel bottoming patterns that now are breaking out. You can get doubles. So once we start getting some major bottoming patterns that are confirmed and the rotation zone, at least in the daily, shifting back into bullish mode, then I can start watching for longer term potentially. And then I'll use my other system. You know, I'll use my other system to watch for stuff longer term. Okay, so I mean, this thing was in bull mode since May of 20. Okay, so that's and it's still technically in bull mode. This is very patient with getting turning points, and it's not just watching a moving average, by the way. It's a combination of stuff because that keeps you out of getting whipsawed. But this is also, that would be a way. And again, I'm not trying to call this because why? Because this could have bounced and then rolled over again. Now you had the Fed with their massive pumping scheme, but this had multiple opportunities to still roll over. But once it shifts to buy mode, then fine. Then I'm long-term bullish again. And long-term bullish since May. And it's still technically long-term bullish. Again, you don't want to be in something like this. There's been other short-term sell signals which taken advantage of. But you don't want to try to get out too early on a major long-term trend. You want to stay with a major long-term trend for as long as possible. So I said on Friday, there were a number of things that nearly triggered with long-term reversals that have not. But just as we still have short-term bearish patterns. I answered your question with Tyler. How low PE can INTC get? Let's see, where's the PE now? I mean, you know, I'd be starting to watch for a potential bottoming play in Intel with that PE. But then I'm watching for some kind of a major, because again, this is not the only interesting thing about Intel is down here. Look at all the support. So if there's a shorter term reversal pattern, I'm going to add this to my list actually. Shorter term reversal pattern with a tight stop below this key area could be very, very interesting on Intel because of how beat up, and the PE is starting to get very attractive for a longer term play, and I can keep a tight stop. But from a technical perspective, don't have a bottoming pattern in bearish mode on the daily or on the weekly, in bearish mode on the daily. The only short-term play I'd start watching for is a potential gap fill, but that would be a short-term play, and I might hold a little in case we do get a stronger rally, but this is still more likely to roll over, and there is no long-term bottoming basing form yet. So anything would be trying to catch a little bounce in here. It is starting to get attractive from a PE area. There's actually a daily buy signal on a close above Friday's high, but that would just be for a gap fill trade. Do I have anything on the weekly? No, not yet. But the PE could go lower, but this thing's getting severely beat up. But that just shows you in the market. So I'd start watching for a longer term bottoming as long as it stays above about core line, key line, the sand. You start getting below about 42, 42.50. That I wouldn't start watching for another bottom back into the mid 30s. This could form at least a temporary bottom, though, so that's something I need to look a little stronger at. I'm in the middle of recording it. As soon as it's done recording, again, I'm not just trying to pump something out to pump something out. I'm trying to make sure I get all the rules clear and get everything clear so everybody can just follow it. And again, I'm putting it out there now because of the market environment we're in. I wasn't actually going to release it, but I'm going to release it and just get it out there so people can get a sane picture of long-term stuff and then a sane picture of when they might consider getting back in. Mike, in 3 years I've been following you. It's been that long? It's been that long? The concept of reversion to rotation zone, forward and reverse harmonics and doubles really has made the difference in our lives. Thank you. You are very welcome, and I'm sure you'll like other stuff I do release. So I'm glad it's been very beneficial for you, Ahmed. I didn't realize you've been following it for that long. NWL is a parent company of Elmer's Glue. That's a consumer good. And look at this is nice. I have not looked at NWL. But that's beautiful. Look at this setup. Oh, that's a weekly chart. Oh, this is nice. Now, this is something that could be turned into a very long-term play, even on backfills. So you're back. You've held the weekly, starting to curve up, flatten out and starting to curve up. Look, this thing has been weak forever. But now, see, I don't need to. There was a little double bottom down here. I wish Looking back then, I was not. But this, see, this is starting to get interesting from a very long-term play. So we had a question earlier about long-term stuff. I'd be looking at this. Why? You can easily put a clear stop in here. Actually, I need to make another note because I'm going to do some more analysis. So look at this. From a long-term perspective, thank you. Thank you, W browser. Look, you have resistance, breakout above resistance weekly, retest, run up. Now it's backfilled. Back to the 200, just in front of this key area, breaking above this short little term base. So I got a great stop on here. I'd put it right below 20 on a closing basis. But this thing could easily get traction over, and this could be a long-term play. And I'm talking many months. This could be a many-month play. Even here, you know, back above the 200, this is prior daily resistance becoming support, rising rotation zone now. So even on pullbacks to 25, 24.75, fantastic. Nice dividend yield too. I have to see if there's any gotchas in this, but I mean, from a technical perspective, this could be great. Manufacturing industrial conglomerates. So yeah, that's the kind of play that's something. Would I be day trading that? No. Would I be investing? Quite possibly. That's why I made another note. This is something you'd put in a portfolio. I'd put in a long-term alert. Don't even need a stop in the market, just long-term alerts way down here. And as long as we're above there, I position size accordingly, and then it's, you know, something you check in on periodically. Come up with your some longer term targets. Again, it gave you warning signs to get out too. What was this up here? Massive, look at that. Massive double top, bled out all the way back down here to prior support area, rallying off of there. I wish I had looked at this earlier. So this is where things even give you, even if you don't get in here. Look, even if you got in here, a break above your rotation zone starting to shift. See, this is a great tie-in before of what I'm talking about. There are plenty of times. Look how long this bled out for. This is weeks. Weeks. How many on the months? Since it triggered the double top. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So when did this trigger? September of 17. And it didn't bottom till March of 20. But still, look how far it's off the bottoms. People are going to be like, I could have bought it for 12 bucks. And now it's at 25. But this is a fantastic pattern now. Longer term, this could run all the way back up to a lot higher prices. So I'm interested in this longer term because it's put in a base. But I don't need to buy when it's 12 if this is when the probabilities are really starting to firm up. Why does that happen sometimes? Sorry, when I see something like this, it's just, look at that. There's your 50%. There's a harmonic cluster right there. First target to raise a stop. Because why? Let's say it hits this target. I'm giving you concepts that you can use even on short-term basis. So even if you're a day trader or anything else, use these same concepts. What did I just do? retracements, and projections. Because here, what we're in an advanced clear path move, not a lot of stopping points. But look at what everything just gave me. And this is another good teaching lesson, then I'll wrap it up. Look at this. Advanced clear path move, just purely based off price action. Key breakdown area. Look at that harmonic area, 62.5. Another key target. Why am I looking at this? For raising a stop. So you start with a stop down here. You get up here. Hey, we're back above. Look at, all right, so we were making lower highs, lower lows. Now we've made a higher high and a higher low. Come back up here. You get to this harmonic, higher high. Do I want my stop all the way down here? No, because I'm going to raise it right above like the around this $25 area because that's where the weekly 200 is. And, you know, it can even come back, backfill, and test this key support area and not get below that. So now I've eliminated risk. I've raised a stop. Next little area, raise a stop, could be around 35. Area to maybe unwind some profits, around 38, 50, 38. You know, and raise a stop again. Then watch on a backfill, maybe get another buy signal. But I've just come up with key levels. Raise stop, maybe take some profits. I'm talking that this could be a many months trade or many weeks trade. But we've just used concepts that you can apply. If this was a 5-minute chart, you'd do the same thing. Okay? With those simple concepts, and we don't need a bunch of, you know, I will watch a couple other things, but even if I erased everything else, even if I erased the rotation zones, and just went back to where's key support, key resistance, couple key moving averages. You give me the 200, you give me key support, key resistance, and let me have my harmonic retracements and projections. I just come up with your whole long-term trade and your long-term stop and long-term raise stop levels and possible take profit levels. And we did that in what? 6-7 minutes? Why are we interested in this? Because it's formed a long-term base and turning up. So I hope that sheds now you can do the same thing for day trade. Just trade in the direction of where the daily patterns are giving you, but still use the same techniques. HD earnings on Tuesday. Yep, HD has been one. Again, I love trading HD. HD at a critical level, right at its 50-week. I'm really paying attention to it here because if it breaks down below here, I'm watching for a much bigger pullback. We already had that double top, which hit the first. It actually hit from the conservative targets. I think it hit everything. That's why I pulled it off. Yeah, there were conservative targets, hit everything right against the 50. Now we break below that. Well, I'd be watching for the bottom of the monthly rotation zone. And then watch for a potential pullback. Now, what do we have on the short term? Because we got earnings coming in. We have a double within a double. So I'm still watching this for a weekly double. That's why I have the target, or the area is already on it. And we have this little daily double. This technically is a little iffy now with this push down, but I will still watch it with earnings to see if we get the pop to about 367 area. If it pops on earnings. But in order for me to do something longer term, I really need to move above this 375 area because then you get a high probability pattern with a lot of upside potential back to 400. But I need to wait for that to happen because overall, daily rotation zones bearish, weekly rotation zones bearish, and we're holding just barely critical support. O'Reilly's still strong. Yeah, O'Reilly's really strong. O'Reilly is really strong. I would love to do some plays in O'Reilly too. And look, this has triggered a big bottoming pattern. Huh. Even if that backfills, it can even backfill. I'd watch that weekly rotations on 662. But this could, the first target 700 and 708. The first two targets are within the move that started it. Just barely, but they're still usable. So I'd be watching, I'm just taking a key look because it came down just below the weekly rotation zone, but then rotated back up. Daily had to form this bottoming pattern and just triggered this longer term, but I'd be watching to make sure it holds 660, 661 on any pullback. Like you said, my popsicle sticks and glue. Well, you keep getting the glue, and you keep NWL making more glue there. Mike, he's in love with NWL. LOL. Hey, when you find great plays, you gotta do the analysis. You are welcome. I'm going to wrap this up. I'm not seeing anything else. Again, thank you for all the nice comments. Thank you for sticking around on your Sunday afternoon. I know, well, maybe you shouldn't have better things to do because this could be very instructive. But if you're tuning in, again, if you're tuning in on a recap, please do consider subscribing, ringing that bell, and hitting the like button, especially ringing that bell so you know when videos go up and we do live streams. If you're not a member of our Discord server, it's only a very inexpensive one-time fee just for admin costs. Please do consider subscribing because I put up when I'm going live streams in there. I appreciate everybody's comments and feedback, sharing time. Again, if you want to look at some more stocks, I'll come on tomorrow, 3:30 Central Time. You can look at some more stocks and quickly recap what the futures did to fine-tune our trading for Tuesday. With that, hope everyone has a great rest of their Sunday evening, and I will talk to everyone later. Bye for now.